Hey Jeffrey, what's up? This is OC. Let me ask you a little bit question. Have you taken a class? We go over this stuff over the class. Also, let's try to give you a little bit of what you're looking at, and maybe the way that you're looking at it's not the correct way. So let's start with a market oracle. I know you did not request this, but it is important to understand a little bit farther ahead. So let's go over market oracle right here and then click the gear icon, right? You'll see that I have a configuration here. Do not pay attention of the numbers because you will have to find your best setting. I would recommend doing optimize everything at the moment because that we have worked through most of them and we have invested a ton of time trying to make things much more simpler. Nevertheless, if you don't find anything that you like in here, go ahead, click disable, and try doing your trend sensitivity and trend agility. By the way, if you want to know a little bit more in trend sensitivity and trend agility, you can join the Fridays class. But this is important because this is trend mode. This is not a buy or sell signal. This is a trend finder, right? And we use it along with that dynamic reactor to find trends. And that's exactly what it's trying to do, find trends, right? I like to do in the 4 hour time frame over Bitcoin, do something like, I don't know, 60-80 or something around also 70-60, something like that, just to find bigger trends, less interference, and also backing my signals up with that dynamic reactor. Remember, every single time that we are above, we're bullish, and we suggest taking a bullish approach, right? And every single time that we are underneath, we're bearish, and we suggest taking a bearish approach, right? So I think that's it for the market oracle, and we can jump into your actual question. Let me add on the indicators. Let's go to invite only indicators and then go over the candlestick patterns right here. So let me click them once and I have it added, right? So take a look at the name because the name we have described them to try to make it easy to understand what they're doing, right? So it is a candlestick pattern, right? So why is it bearish? It is not because of the trend. Remember, that's why we have trend mode, and that's why we have teach you how to use trend mode, right? So what we are trying to find in here, it's a bear pattern. If you hover over candlestick patterns, and by the way, you can learn about this in the tutorial on the YouTube webpage. It's very well described, so I'll go just a little bit faster in here. So click in here and you'll see that you have this rising tree method, bullish hammer, bullish engulfing, 3 wedge shoulders, right? And the same way with the bearish signals, falling tree method, bearish engulfing, bearish hammer. So you'll see bear E, right? So that means it's a bearish engulfing, but it's talking about candlestick patterns, right? If we do a quick search and do candle stick patterns, you'll see that that's exactly what we're charting. So look at that. For example, right here, you can see that it's not talking about the trend, right? It's talking about a localized reversal or change of direction based on a candlestick pattern. And that's what we're trying to show you there. So it is not telling you that this is a bearish signal. I mean, sorry, it is not a bearish movement. It is a bearish signal, and you can see the price did move to the downside, right? So that's what it's trying to tell you, that we have identified a candlestick pattern, not a trend, right? And based on that, we can expect a localized change of direction, based, of course, on the movement. But remember that we teach that none of the signals are meant to be standalone signals. Instead, you need to use them on something else. Like, for example, your oscillator. So if you're trying to only trade out of this, you're going to have a very, very hard time because we usually compare with driving. So if you have one single tool, it's just like I have only one of your senses. Maybe you're only using sight, but you're not using your hands or your feet or anything else to steer the car or the vehicle, right? So despite you saying something is bearish, you cannot be actually taking action because you need some more tools. Why? Because we designed the tools to be very, very good at something and that specific thing. And then if we collect them or we sum them, right? Or if we gather them together, we're going to have a lot of strength based on multiple information on the chart, right? So this is a bearish engulfing candle right here, right? This is also a bearish engulfing, and that's why we have marked them. Also, you're talking about an X, and that X, look at that, it comes with an FTM because we're looking at candlestick patterns, not at chart patterns. So if I double click on that and I try to look for FTM, I will see that it's falling three method, right? And you'll see that this is exactly 1, 2, 3, and then the big bearish candle. So that means that we have a bearish pattern, right? So look at that. We were already breaking on the oscillator in the middle region, breaking through that zero line, and we are hovering underneath of that. That means that we're losing momentum, right? And then we're having a little bit of bearish pattern. We are also underneath of that dynamic reactor. So everything is pointing to a bearish move, right? So that's how you use them. So I think I have show you how to use this. So let's do something else. So in this case, look at that. We have a bullish engulfing. So bullish engulfing pattern is this one. And what do we see? We see a movement to the upside. But we have broken through that dynamic reactor. We are bearish. So what can we expect of a bullish pattern? At least we teach that you should expect either ranging or a movement to the next resistance, or in this case to that dynamic reactor. But how do we know where is the next resistance? That's where we have our support and resistance bundle. If I turn it on, you'll see that we are within a support and resistance. But furthermore, let me change this and tweak it. Let me just turn this off and then use a predictive tool. In this case, I'm going to be using predictive ranges. And also I'll be turning on market oracles, support and resistance levels. So here we go. Since we are a little bit too far away, let me just do the replay button so we can see what we have in there at that moment. Here we go. Now we see that we have bounced from this support line, right? We had a bearish engulfings, but we are underneath of that dynamic reactor. So what are we expecting? We're not expecting a change of trend because that's why we have trend mode activated and properly configured, right? To show us the trend. A bearish or a candlestick pattern, just like you can see on the usual text and what is usually teach. It is not showing you a change of trend. It is only showing you localized change of direction. So I believe that you're looking at these signals, the candlestick patterns, as change of trend, which are not. And that's why you may be having a little bit of that hard time reading them. Because remember, trend node is looking for trends, and candlestick patterns is looking for candlestick patterns, which shows you localized change of direction. That's why, for example, if you were maybe into a long in here and then you're going down, you see a bullish engulfing, then you can take or wait for that bounce to the upside and then close your long, your losing long, into a better position rather than close it all the way down here, right? So you see now how is it working. Also, for example, remember that we teach on the classes that it's not about the breakout, it's about the retest, and usually we see retest, but maybe you miss on this retest. So you already are in a strong downtrend. You already have broken through that dynamic reactor, so you are strongly bearish, right? You are underneath of that zero line, right? So you're hovering underneath of that zero line. You see a bullish divergence, you see a bullish engulfing, and you also see bouncing from that resistance. So you're not expecting a change of trend. You're expecting a bounce, right? So why is this important? Because if you enter your short position somewhere in here, and maybe you put your stop loss like in there, you might be stopped out, right? But if you take a look at the bullish signals and the bearish signals, so which ones are stronger? Usually strong signal, it's that we are underneath dynamic reactor and we have a bearish trend, right? That is strong. But if you have a bullish engulfing and then you're on support, you can expect a bounce. So better wait for that bounce and then enter your short on the bounce, right? So once you start reaching oversold or getting close to that zero line, look at that, getting very close to that zero line, that could be your entering zone. So that's where you enter or re-enter for your short. So that's how you use them. They're not meant to be trend changing signals. They are meant to be just like in classical TA, a candlestick pattern. So let's also take a look at your other questions. Let me just clear this up. Let me just get rid of the replay and then let's do the market right away where we are at. All right, so we are in here. Remember also, not because we have one single signal of bearish engulfing, that means it's going to be changing direction. Well, in this case, look at that. We are underneath the zero line, right? In here we were underneath the zero line. We had a reversal. We also had a bullish divergence, and we have a bull engulfing, right? A bullish engulfing. So what you can do, you can enter into a long where to the next resistance. In this case, we have a strong resistance somewhere around here or somewhere around here. Why? Because we have this dynamic reactor, we have this resistance, we have this predictive range, we have the trim line in here, and we also have this other resistance. So you can see it's bunching up in this zone, right? So now we're broken above the zero line, so gaining some momentum. So what could we expect? Maybe to either move sideways or even go find that big resistance zone. So you see how everything is working together? So I will not go that deep because we teach this on the Friday and Monday classes. I do invite you to join them and actually participate in the class. In fact, we're giving away extra experience for a opportunity to win a free month every single time that you participate or answer some of the pop questions, right? Also, we can see a double top, which is very powerful. We can see a bullish divergence, so we can speculate for ranging. Why ranging? I invite you to go watch the latest video that we have posted on the Chart Prime as live, and we talked about this pattern and why we're expecting it to be ranging. So let's move on with the chart patterns. So chart patterns. Let me turn basically everything off so you can see it way much more clear. So chart patterns right here. Let me configure them, and we are on big. I usually recommend you to start with extra large, right? So let's do extra large. Remember that the tools react to the market, not the market reacts to the tools. So not because I have turned on chart patterns, it means I'm going to have a pattern right there, right? Because I'm looking, or the tool is looking for patterns in the chart, not the chart changing shape based on what we do on the chart patterns, right? So let's start with extra large. Usually the bigger the shape, the better the fit, and the better the fit, usually the best, or yeah, the best the reaction, right? So let's go over daily, and we do have a big pattern right there on daily. Look at that, how precise it was. If you would have entered for longs at the bottom or shorts at the top, you would have made a great profit, right? And we have that cross. This cross, it is from the chart patterns, right? Which is different from the candlestick patterns, FTM. That's different. So we usually have it when we have a technical breakout. A technical breakout doesn't mean that it's going to go farther back down. It means it's technically based on what typical T8 have taught us, that it is breaking out, and the possibilities are for it to go down. Well, we usually wait for a retest and then enter for that retest. If we see rejection, for a short position, where to the target So I do not expect, personally, I do not expect seeing Bitcoin at 10,000. Nevertheless, that's only me. This is only a speculation, right? So remember that also all over the internet and all over the important TA books, you read about fake outs. And what's a fake out? It's when you see price manipulation, maybe breaking out and then getting back in. So if you don't see rejection in here and instead you see the price go back in, maybe retest and keep going, it usually means that we're going to go find the top of that triangle, which is what I expect us to see, right? But do not listen what I do expect, do your own analysis. So let's change what we have in here. So double click on that pattern. I'm gonna have my chart patterns settings, and I am finding, or the tool it is finding, an extra large setting in here, which is have play out very beautifully, right? Let me click big and wait for that little eye. So big, change a little bit of shape, and what do we see? We see a fake out, the same thing that I was telling you. That's why we wait for a retest and confirmation from that retest to actually be jumping into a long, right? Because usually those fake outs are usually generated for price manipulation or for a fundamental analysis. And remember, the fundamental analysis is not something that we can control, right? So I usually tend to stick with the biggest pattern that I can find. And yep, let's do also medium plus. Let's see. Okay, medium plus, we do have a pattern medium plus. It broke out nicely and then basically took a technical target. Let's do medium, only medium. We don't have anything in medium, and that's fine. It is just telling you that we don't find a medium pattern. It doesn't mean that it's not pattern at all. It just means that in medium settings, there is no pattern to be found, right? Then let's do small, and we have a couple of small ones, which they have already played out, and they are already expired, right? Why are they already expired? Because we cannot longer trade on them. So that's how you use chart patterns. For example, let's try to do the same thing with something else. Let's go to Ethereum, and then here we go. Look at that beautiful analysis. We called it for, look at this bounce, and we talked about this previously. This was our entry and this was our exit, and look at that, it respected this beautiful pattern. This pattern, it's on small, right? Remember that I always start with extra large and see if we can find something. Yes, and we did. Look at that extra large. So one more time, if you would enter at the bottom and for longs and enter at the top for shorts, look at that, you would have made a good profit, right? Remember, none of these tools are meant to be used as a standalones. So you need to do your research, and then I suggest going over most of the presets to see which pattern is fitting best the price action and stick with that one. So in this case, medium is not finding a medium pattern, which is okay because we already have found an extra large pattern which is playing very nicely, right? So I think I have covered most of your questions. If you have more questions, please feel free to join the classes. Remember, it's on Friday and Monday classes, right? I will be very, very excited to have you around and get your questions answered.